Let me just make sure that this is being recorded, which it is. Awesome. All right. So let's create a session. What do we want to trade today, guys? What do you want me to backtest? GU, gold, NQ, ES. What have we got? I'm going to wait until there's at least like 4x high time. NQ, NQ, gold. Tesla. Rude. Nvidia. I don't do stocks. Unless it's like NQ or ES. We can do a 50-50. Seems to be quite a few for gold and quite a few for NQES. NQ and ES obviously is the most common one that people use, so it's like always a good go-to. But we'll do gold after, right? So we'll do a bit of NQ and ES, and then we'll move to gold, possibly GU, EU. Okay, so backtesting. Futures, NQ, yes. Do a balance 100k. What's a year? ICT work on forex? Yes, it does. What's a year we haven't done? We did 2023 last time. I don't think we did 2021. We definitely haven't done June 2021 before, so let's do that. And then we'll just do that up to today's date. Okay. So first things first, we're loading in. All right. We're on our session here. All right. Now, obviously, this is midnight, June 1st. So first things first, what I'm going to do. Oh, yeah, screen. My bad. Sorry, guys. Screen 2. Thanks for the reminder. Okay, so first things first, obviously, we're loading in. All right. You guys didn't get to see me setting up the backtesting session, but I did. This is June 2021. The 1st of June, so the 1st of the month of June 2021. We've done the previous years and other sessions, so just this one, we don't know what's going on, so may as well do this one. So yeah, jumping in. Well, first things first, I'm going to use the go-to button to go to New York session. On NQ and ES, New York session is the most volatile session and also the highest probability session to trade in terms of ICT. Now, what I like to do is to put it an hour before. Right, so I don't always like to trade on market open. I personally trade an hour before market open. So you can see here that's 1:15. So that's 8:15 EST for those of you that are from EST. I'm GMT time zone, so that's why it says 1:15. It's 5 hours ahead. So first things first, starting off on the 4-hour time frame, right? So I'm looking on the 4-hour time frame. First things first, I'm looking right. Okay, what's my daily bias? Where do I want price to go? Now I can see here. All right, we've got this trend line liquidity here. So this is what we call engineered liquidity. So this is potentially orders to get taken out. We've got these fair value gaps down here, and we're also in a premium of this range. So just drawing out my fib tool, right? Discount of this range would be this 50% level. So this could potentially be an area where price would like to pull back. And then we could possibly look to continue highs to take out these highs. Right, so I'm looking for two sorts of scenarios here. I'm looking for potentially this high to get taken, and then we pull back and take out back into this fair value gap. The other scenario that I would potentially look at for today is to basically come up to here. Then we tap into this higher time frame order block up here. So just up here, you see this one on the left, right? Tap into there, and then again, I would still be looking for the short back down to this sort of 50% level down here. Because this obviously is this engineered liquidity on the 4-hour time frame, and we've also got the fair value gaps below. Sorry if I'm a little bit, like a little bit ill at the moment, so I'm going to try my best here. So yeah, let's see. So I'm either looking for this high to go or this high to go. So let's drop down onto the lower time frame and see. So let's drop into the 15-minute. And what we're also going to do is, because we're going to be looking for SMTs throughout this, SMT is basically a crack in the correlation between MQ and ES. So I'm going to put MES here. And this is ICT concept is higher probability on something like NQ and ES because it's a lot easier to read. And the reason for that over something compared to Forex is because NQ, MES, you can very easily see SMTs. ICT concepts also works very well on Euro USD and GBP USD. You can't see the charts. You actually not see the charts. Guys, can you see the charts? Okay, cool. I can't zoom in a little bit, I'm afraid. It's just the screen share. But yeah. So the reason that ICT concepts works better or is easier, so to speak, on NQ and ES and GBP USD and Euro USD, for example, is because of that SMT, right? It makes it easier to spot when the market's running out of steam. When you see, say, for example, a bullish SMT, you know that the bears are running out of pressure and the market is likely to reverse. Can I make the chart bigger then? It doesn't really do that much, I'm afraid. So yeah, that's essentially what SMT is. So that's what we're looking at. So let's draw out this high over here as well. All right, the same high is here. So we pull that over. All right, okay, so we're waiting for one of the highs on either ES over here or NQ over here to get taken out. I'm just going to press sync time frame and let's see. You are big and the chart is small. How can I change? Just click on the image of the chart, or I can turn off my camera altogether if you like. So that high has just been taken. The high on ES did not get taken. So this here is what we call an SMT, right? And you will see these happen more and more and more, right? If this is a new concept to you, I highly, highly recommend to look out for this. This is probably one of the most powerful concepts that obviously you can get in ICT and will drastically increase your win rate. Okay, so now obviously we've taken that out. Let's drop onto the lower time frame, right? We've got an SMT there. Do we also have a 1 minute SMT? So just dropping onto the 1 minute. No, we don't have a 1 minute SMT. Right now, I mean, to be honest, this is already looking like a good setup, right? So what we do is we use them in correlation with other things. So in this scenario, I have an inverse fair value gap here, yeah? Now, is that closed through? Okay, so that has closed through, right? So we use an SMT with an inverse fair value gap. If this SMT wasn't here, if this SMT didn't exist, this inverse fair value gap would probably have about 50 to 60% chance of playing out. With the SMT, it probably takes it up to 80, maybe even 90, if used correctly in some situations, percent of playing out. So SMT drastically will increase the probability of your trade. The reason, as I say, this is so successful is this high was basically taken out on NQ. This same high on ES was not taken out on ES, right? So there's the same high. It's there and it's there, okay? Now, the reason, obviously, I said it's so successful, this is a clear indication that buyers in the market are running out of steam. They managed to take the high on NQ where there's less orders, right? But where there's more orders needed to take the high on ES, they weren't able to take that high. That is a stall or a lack of pressure from buyers in the market. Okay, so that tells us that the market is likely to reverse at some point very, very soon. Then we compare, obviously add that and, with other concepts that we're using for, in this case, an inverse fair value gap for an entry. And then that drastically increases the win rate. So our targets, as we said, is this engineered liquidity down here, right? So we want, this would be, we'd have like a TP1 here. This would be our break even at this low here. And then our full TP would be these lows down here, okay? So we can go ahead and get straight in this, just so happens that it's already inversed. And yeah, let's see how this plays. And we want to put our stop loss just above the high, just to be safe, if you can. If your R multiple is good enough, I would recommend. So TP1 would be here at a 1-to-1, TP2 down here at a 4-to-1, and final TP down here at looking at a 7-to-1. All right. So let's go ahead, mark our trade, 1% risk, sell, and let's see how we go. We got market open in 45 minutes. So that's TP1 hit. So I'm going to go straight to break even there. You could potentially close off half your position there. So at this, so I'm closing 50% off there. and I'm just reassessing. We've still got this engineered liquidity. We've still got this SMT. We're completely disrespecting every single, you know, like bullish PD array. This fair value gap got inversed. This one was already mitigated. This one has also now been inversed and closed through. So this gives me concrete conviction to hold this to these lows. Potentially you would trail your stop. Yeah, you would definitely be trailing your stop here. And there we go. That's full TP. So yeah, that's trade one. Yeah. I couldn't do that 10 out of 10 times in a live market, I can tell you that. How do you take partials on TradingView? Whenever I try, it just creates a new order. So that's because you're trading futures. So let's say, for example, if you had 10 ES on to take a partial, you would have to then buy 5 ES to take a partial. Yes, this has been recorded. So in this case, it makes more sense to trade NQ instead of ES because the liquidity on the high is already taken, even though ES is weaker, didn't manage to take the NQ high. So no, yes, it makes more sense to take the sell on ES because ES is weaker. However, it depends on your risk tolerance. So for me, I only ever trade NQ. I never trade ES. I use it as, you know, sort of to help my bias and help my conviction. But I will only ever trade NQ purely because it's more volatile. It will get to your take profit faster and you'll get sharper, bigger moves, allowing you to catch a higher R multiple over the long run. Whereas ES, it takes a lot longer to get to the target. So in my opinion, it's always better to trade NQ. But again, it is preference. Okay. Sometimes there's occasions where you can take the trade on ES because NQ is just absolutely going up to the moon and ES isn't moving it at all. That would be a really strong conviction that ES is the weaker one. You should probably take the trade on ES. But in this case, it's not too big a deal. I'd still rather go with NQ. Okay. Cool. Cool. The checklist that I'm using, I'm just using every single ICT concept today. I'm not using a particular strategy for this. For this trade in particular, this would have been the inverse fair value gap model. So I'm going to use every single model. I'm going to use the 22 model, the IFVG model, the Venom model, the, oh God, there's loads in there. Just pretty much every single ICT concept. I'm going to merge them all in today together and not necessarily trade a particular model. But I do have... it makes most sense to use Euro USD, GBP, USD. They make more sense to use ICTs because you can spot SMTs on them. Whereas say something like gold, you can't really use gold and silver for SMT because they're not reliable enough and they're not correlated as strongly together. So you will have the best chance of trading ICT concepts with two assets that are extremely correlated. So NQ and ES is the reason that you'll see the majority of people trade ICT on NQ and ES. But yeah, cool, good. First nice trade. So now we've taken out these lows down here, right? And we're in this fair value gap here. Yes, I will be using unicorn as well. Okay, so we've taken out these lows. So now potentially we could look for buys, right? We've taken out all of this engineered liquidity. We've had this big move. And if I look here, it looks like we've also got an SMT back the other way. So this low here, yeah, so this low here, right, is this low on ES. So ES didn't even come anywhere near this low, okay? Yeah, potentially you could turtle soup this, but I'm not going to use turtle soups today because I think that's a bit too much. So yeah, so now I would be potentially looking for a similar setup back to the upside. So let's delete our trade on that. Let's clear up our chart, make things neat. So obviously this is our SMT right here. These are our lows that we've taken out. And this is sort of this high time frame fair value gap that we're currently in. Okay, I'm not going to drag it all the way across because I want it to be neat. Okay, so let's go ahead and do this. So I'm going to go on the 5-minute time frame and look for something here. Let's skip a candle. Now we've obviously got these fair value gaps here. We've got this one and this one. So potentially if price were to see sort of invert through them, we could look for a trade up to this level here. But let's go ahead and see. So it has now inverted this one here, right? But this would be a higher risk setup, okay? So the reason for that is because we could easily then just tap into this fair value gap and then reject and continue to push down. So ideally, we want to see all of the fair value gaps in what we call the manipulation leg get taken. Okay. Now the manipulation leg, right? So for an inverse fair value gap, it's only valid if it's part of the manipulation leg. What do I mean by the manipulation leg? I mean this little run of price that took out the lows. This is the manipulation leg. So all of this here, right here, this whole move down is what we call the manipulation leg, because this is the move that took out the liquidity. Does that make sense? I hope it does. Anyway, so we want to wait for both these fair value gaps to get inverted before we can even look for a trade. Okay, so now they're both inverted. So now we can potentially look for an entry. So what have we got? So we're breaking structure there. We've potentially got this 3-minute order block here that we could retrace into. And what I would like to see is price retrace down into here somewhere, and then for us to potentially get our entry. Looking at this though, I'm not seeing loads. I think we just missed an entry. So there was this 1-minute order block here. And we inversed this gap. So you could have got a long up to one of these highs. Again, not my favorite though. I'd like to see a deeper retracement, maybe into the 50% of this zone. So somewhere down here. Or a more obvious liquidity sweep. Like I'm not seeing an obvious liquidity sweep. Potentially, actually, if we could take out these lows here, right? Because I want to see a clean liquidity sweep, and then I want to see a move up. So something like this, it would come down, tap into this fair value gap, and then come back up to take this high. That is what I would like to see. So you could, that inverse, if you took it, you would have got this here. So you could have taken the scalps that high, but we didn't take that. Let's see. I want to see it pull back to there. Okay, so we take out that low. Awesome. Now I can look for a buy. We could potentially just buy here, to be honest. This could be a CISD, so changing the state of delivery. As that was the manipulation leg that took out the low. So yeah, we could just buy here up to the highs. And I'd put that there. Just check the high time frame. I'm not in love with this, but we'll do it. Okay, so we do move away there. I'm going to do a quick break even here. And you would, if you were on a live account, you would be taking a partial here. So I'll take a partial for us here. I don't want to cancel the order. 50% off. And now just leave the rest of the run. Again, like you're looking for the same things over and over every time frame. All right, so we take out this low and then we look to move up. We take that out, we tap into the fair value gap. So we take out these equal lows, tap into the fair value gap, and now we should push up. And there you have it. See, it's like, so with ICT, price is fractal. So whatever happens on the 1-minute time frame works on the 5-minute time frame, on the 15-minute time frame. Essentially, what you're looking for most of the time, though, is this similar sort of pattern that we just saw here. Right? You're looking for some sort of liquidity, then a tap into a fair value gap or an order block, and then you look to trade the other way. But you're looking for a manipulation to take out the liquidity and then straight trade up the other way. Essentially, that's the pattern you're always looking for. Am I really... Okay, I've been edged for the TP here. Oh, that's embarrassing. Okay, so I got edged for my TP there. That's a shame. However, it does look like we might be getting some kind of SMT here. So ES is still continuing to push down. We could look for a re-entry on this, right? We still haven't tapped into this lower fair value gap here. So Did we tap into premium on that move? I didn't even check. So no, we're still currently in premium. So tapping into discount, we could still definitely make this work, taking out this low. It does. Okay, we took out that low. We tapped perfectly into that fair value gap. This here would be our CISD. So any close above there, we could take a long back up to those highs. We also left liquidity here now. We've got these equal highs here. So this is now a great target. Liquidity above. So let's see. Do we have an SMT? Let's just have a look. So give us that extra confirmation. No SMT, but it's fine. I'd still be happy with this. There's our CISD. Getting along. Stop loss below the low. I get up there. We could probably refine this. We drag it a little bit tighter to get a better risk reward. And then we buy. All right. Okay, we're in profit. Chuffing around quite a bit. Here's another little tip for you guys as well. So if you get like a CISD entry, it's a lot worse to go break even as soon compared to when you get like an inversion fair value gap entry. And the reason is because it tends to, just from what I've noticed over the years, it tends to chop around a lot more. Like, can you see how we had this CISD, valid entry, right? Obviously, in the end, we just retapped this fair value gap here, right? Ends up being a pretty clean entry, but we do chop around for quite a while. Whereas if that was an inversion fair value gap, you wouldn't see as much chop there. But yeah, we do push up. All right. And then same sort of pattern again, always what we're looking for, liquidity build up, manipulate of that low into a fair value gap, or in this case, an order block. Here's your order block. Taps in, and now we should get the push to the highs. CISD has changed its state of delivery. I will explain that really quick now. So there's our TP, right? Full TP, lovely. So far we're up 9%. Similar to breaker structure, not quite the same. So just to explain CISD for you really quick. So this here would kind of be like our, let's say our order block, right? This little candle here, this is our order block that essentially cause these lows to get taken out, right? So let's think of in this terms of order blocks as more like support and resistance to a sense, okay? So this order block took out these lows. This was the manipulation leg that took out these lows, right? Then price then, right? Just going to get the arrow tool. Close back above this order block with this candle. That then is what we call a change in the state of delivery, because our bearish PD arrays are no longer being respected. They've been disrespected. So now, right, we can also see that we're starting to open up. So our change in state of delivery happens. Our bearish order block of the manipulation leg gets disrespected. So then what also happens is bullish PD arrays, such as fair value gap, in this case here, opens up. So now we've made that flip from bearish, because we took out this liquidity, made a change in state of delivery, opened up a bullish fair value gap, to now bullish. Okay, I hope that makes sense. I can go over that again. I'm sure we'll have more trades. Can you explain what an order block is and how to spot it? So I'll link you a video, because we've done these sessions quite a few times, where I've gone over order blocks, fair value gaps, and kind of the basics. Here you go. I'll link you this here in the chat, right? So this is how to find daily bias, explain order blocks, fair value gaps, all that kind of thing in that video. But an order block is essentially, to simplify it, this isn't exactly what it is, but to simplify it, it's the bearish candle before a bullish, the bullish candle before a bearish move down. So this candle right here would be an order block, okay? This strong aggressive move here, right? And then this last candle before the strong aggressive move is an order block, okay? Coming back here just to show you some more. This strong aggressive move here, this bullish candle just before it would be your order block, okay? And you see how that gets respected and then price sells off. This strong move down here right? This would be your order block because it's the candle before the bullish candle, okay? This strong push up here, right? This candle here would be your order block because it's the bearish candle before the move up. Going back again, this strong move down here, this would be your order block because it's the last bullish candle before the strong move down. Okay, so that's how to spot order blocks essentially. But in that video I have just linked, I do go really in depth into how to decide the highest probability order blocks and what makes a good order block versus a bad order block, all that kind of stuff. So yeah, if you're looking for that, obviously just check out that video. So now, let's skip to the next day here. We've kind of had our trade. I'm expecting price to continue up higher. But I don't expect us to kind of get an entry here. So, I mean, we've got this 15-minute that we inverted here. And price is looking like it's going to continue up. So we could look, so like there's this 15-minute fair value gap here. You could look to trade to then continue to the upside, just to sort of fill this gap or trade into this higher time frame gap up here or take out that high. So we could look for a long position from around here. We've got an order block here, just to point it out again. So we could look for price to trade down back into this order block, and then we could look to trade it up into there. So let's see what happens. The price does trade back down into there. So yeah, but we did also just invert 15-minute gap here. So you'd have a bit of sort of confusion here because I have a bullish bias since we took out all this liquidity, but we just inverted a 15-minute gap. So it's now 7:30 at night. Day's kind of over. I'm going to skip to the next day. It's not really a high probability scenario for me here. So I end up skipping to the next day. Price did end up coming down, and so if we would have taken this short here, after that inversion on the 15-minute, we could have got a nice little trade there. 1-to-1 type thing, but again, not the highest probability conditions, not the highest probability setup, so I didn't want to do that. Now what I'm looking at in today, all right, I'm still in the same sort of area, so I don't need to go back to the higher time frame, but I've got that high there to work with. I've got this order block here and this fair value gap opened up here. So we're recently creating bullish PD arrays, so I want to trade to the upside because that's where order flow in this occasion is telling me that price wants to go. So I'm looking for this high to get taken. So I'm going to drop to the lower time frame. I'm going to wait and see how we react off this area down here. Okay, so it looks like we get news come out and take us up. So unfortunate that news just takes us there. It taps our order block perfectly, and then it just flies up. So we don't get an entry there. You could enter really late here because it's almost guaranteed that it's going to hit your take profit. So let's just put one buy there just for the fun of it. And then okay, that was closer than I thought. Just for the fun of it, and then that ends up hitting TP. So now this high is taken out. So that was just a mess around trade, guys. So now this high is taken out. Now we'd want to look for sells if we can potentially get them, right? Because also looking at ES, we've got SMT here, okay? So on the 15-minute, NQ took this high. That same high on ES was taken yesterday, actually. Oh, that's interesting. What about this high on ES? There's SMT between there. Okay, potential. Let's see what we get for. I'd probably want a 1-minute SMT to confirm any sales then in that case. Just to be safe. Okay, so that's potential there. We take out this recent lower time frame liquidity, and then we also form this fair value gap, and we end up having this inversion here with strong displacement. So it was quite aggressive moves to the downside. So I would potentially consider taking this down to these lows, maybe even like these lows down here from the news. So where was the data low from the news? Data lows were down here. So yeah, I would look at taking this short down to data lows. A stop loss is going to go above the high if I can help it. TP1 is there. Take profit 2 is the data lows there. Let's sell. So go straight into profit. All right, TP1's hit. I'm going to move stop loss to break even. Close 50% of my position there and just lock that in for the profit for the day and leave the other one to go. Do we get to the data lows? We take out these lows. Doesn't look like we're going to get to the data lows. Okay, and then we get taken out break even. So that's unfortunate, but it is what it is. Not much you can do there. Looking at this again. Where would I say to go now? We swept that liquidity. We didn't take out data lows. I mean, it looks like we want to go for this high, right? So my draw on liquidity is this high still. Potential pullback there. Inversion there. You take a scalp here. Yeah, okay, cool. Yeah. So I just had to check that. So we've got this 5 minute here that we're tapping into. This 5 minute bullish fair value gap that's opened up. Pretty clear draw on liquidity of this high. Is there an SMT? SMT. Yeah, there is an SMT here. So we can take this just as a scalp. Let's put our stop loss just below there so we get a better risk reward and buy it. Okay, that's TP. That's nice and easy. Where do I want to look now? So now I'd want to look for sells because we've now taken our buy side liquidity. However, on the 1 hour, we do look pretty bullish to trade up to this high. If I'm looking at this though, we have got the SMT here though. That's the only thing that's making me think we could possibly get another scalp down. SMT right there versus this here, same high here, hasn't been taken out on ES. So SMT. We do have this potential inversion here forming, right? So we could look to trade that back down. Let's see. SMT is still valid. SMT is still valid. Still valid. We do close through there. So this would be a crap trade, but you could take, say, this to like this order block and get a 0.8 to 1 type situation. I'm not going to take it because that would be a crap trade. So yeah, you would have got TP here on that. You could have even traded further actually to this low. Oh, that low doesn't actually end up getting taken. That low get taken over here. Yes, that low's been taken. So that's SMT there with these lows. Potential CISD here. Close above this. It's choppy. Inversion play here. Right, we invert this fair value gap. And the SMT. That high, that low there. Yeah, so we've got another SMT formed here. In this low and this low. Ah, shit, I didn't enter. Okay, well, I would have taken longs there and I would have targeted these highs. Didn't get my entry though. Could look to re-enter here. Nah, it's not the best. That would have been your play right there. That would have been it. All right, we take out those lows. We take out all these lows where we kind of consolidate in. We inverse this fair value gap, even as tiny as it is. We open up a bullish fair value gap, and then we just go up. But this rips. Yeah, it didn't rip, but it went up. Okay, choppy day here, right? This is now like crappy price action, and we're just chopping around. So I'd skip this day. I'd now just be done on that day, happy with my profit. What's the next day? I appreciate I might be going a bit quick, to be fair. Has anyone got any questions, or is everyone still following? And I'll slow it down for today's trade that we end up taking, whatever it may be. So we're on Thursday. So let's go back out to the higher time frame. Let's have a reset. I feel like we were on the lower time frame a bit too much there. Kind of got a bit engrossed in that one. Is there a playbook on the strategy? Yes, there is. It's on TradeZilla. On which trades not to take. Okay, fair enough. Fair enough. 1 second. I'm just linking this playbook. So yeah, so guys, you can access loads of playbooks on the TradeZilla website. If you just go to resources, profit playbooks, and here you can find my playbook that we're using on this session. Okay. And on there as well, it's got a full breakdown, right, of the strategy, SMT, obviously, fair value gaps and examples, all that kind of stuff. You can find it all here. So just going back to it. So trades that you don't want to take, right? Trades that you don't want to take. You don't want to take trades that have multiple fair value gaps in the leg. You don't want to take trades that don't take liquidity. And ideally, you don't want to take a trade unless it's got SMT, unless you've... But what you want to do is we want to start off on the higher time frame always, right? And we want to kind of have like our bias going into the day. So like, what is our bias going into this day? Okay. So I'm looking at this right now, all right? I'm on the 4-hour time frame. I can see, right? You see, we took out this high, okay? That's the first thing. So we swept this liquidity, right? So that's cool. The last liquidity swept was buy-side liquidity. So we're in a sell program, so to speak, okay? Now, we've also made a market structure shift or break of structure, whatever you want to call it, right? Right here. So this 4-hour candle has closed below here, okay? So this already, just this alone, gives me a bearish bias. Now, where do I look to target? I look to target this order block, right? Would be the next safest point of target, or this 4-hour fair value gap just here in this wick, okay? So, okay, step 1, 2, 3. That's it. I've got my bias. It's that simple, okay? Now I'm dropping onto the 1 hour. Where can I look to enter? Okay, so we've already made this big move down. I would like to see price come back up into a minimum of this fair value gap here before I could potentially look to take a trade, right? So what I'm going to do is just drop onto the lower time frames again. See what we can get here. Just let it kind of pull back. Okay, so we missed that. All right, so what did we miss there? All right, so here is a lower time frame setup, right? Okay, so I missed this, but there was a 1 hour fair value gap here, right? Whereas I was only looking at this one like an idiot, right? So price took out this previous candle's 1 hour high, tapped into this fair value gap, right? So we took out this liquidity up here. So if I just go onto the 30-minute 15, you can see it a bit cleaner there with that high and a fair value gap above it. What makes a high probability liquidity sweep? If it has a fair value gap or an order block above it. So this kind of prominent wick here is kind of has this fair value gap above it, right? So that makes that a high probability liquidity sweep. Sorry, can't speak. Looking at this, then you would have dropped to the 1 minute time frame, right? You've got your liquidity sweep, right? Then you've got your 1 minute inversion. It's right there. Looking at this, was there also SMT? Same high. Where's that high over here? That high is up there. So yes, there was SMT, right? Between this high and here. Is that same high over here? ES took, but NQ didn't, right? So this high here, this one here, if you look at the timestamp, 11 a.m. This high here, 11 a.m. They're the same ones. It's just ES took that high and NQ didn't. Okay? Right. So now you would look to take a sell once we close through that. and then you would target that order block that we spoke of, or just these lows. Okay. Now, obviously, this is a hindsight trade because I saw this happen, but yeah. Oh, gets instantly taken out. My bad. But so Wix and news ends up wicking you out, but in the end, the trade direction ends up being right, but the entry wrong. And the reason you're wicked out on this is because obviously look at this action here. It's just very wicky. You're getting manipulated. And then the price finally moves down to the take profit. But all good. Hey, can I ask a question relevant to ICT? Yes, you can. Did he say a fair value gap is valid because it has another fair value gap above it? No, that's not what I said. If anything, that would make a fair value gap less invalid. A high probability liquidity. Right. Let me draw this out for you. Let's imagine this is a fair value gap here. Yeah. This fair value gap currently is low probability. I don't need a circle. This fair value gap right here currently. So where are my tools? So this fair value gap right here currently, if price were to just trade straight into this, right, this would be low probability to continue down. Why? Because there's no inducement. There's no liquidity build up there. Every order has a transaction between buyers and sellers, right? The reason this works is because big players need to get filled for their orders, right? So this fair value gap that goes like this and has this liquidity there, right? And then taps into the fair value gap, that is now high probability. Why? Because we had this inducement here. This inducement, right? So this high, not quite touching the fair value gap, but getting near it is an inducement of early sellers, okay? And then that is what generates the liquidity so that when we tap into this fair value gap, then we get an aggressive, strong reaction away from it. But on the flip side, if we weren't to have that inducement, and I was to just draw it up like this here. So if price were to just go like this, it would probably do something like this and chop around for a while before then eventually taking the liquidity and then just dumping down. So high probability, low probability. Got it? Cool. Can you clarify what you said there? I hope that clarifies that. Thanks. When is the Bybit beta still going on? Is that data or what? Bybit is already live. If you go on TradeZella and AutoSync your broker, Bybit is already live. You can go use it as of right now. I wish you'd do more of this as Newman does, pre-market analysis, etc. I can start doing it. Yeah, I'm pretty strapped for time these days, I'll be honest. But I can start doing it for sure. Bybit for crypto. Yeah, I'm pretty sure. It's live. It's just we haven't announced it, but it is on there. Will this be posted soon? Soonish. All right, so that's our trade. Just carrying back on with this, obviously, we're looking for price to continue down. Yeah. If you sign up, use code Discord20 and you get 20% off the monthly or the yearly plan. So obviously this is our order block. We want price to continue down to it. Price then does that. Okay, cool. A higher time frame objective is met. Okay. We also, did we take out liquidity? Yes, we did. Okay. So we took out this low. Great. Let's check what low was taken out on ES. Let's compare. All right. So over here, one sec, guys. Sorry about that, guys. So obviously we take out that low, right? Over here, what's ES done? Did ES take out that low? Have we got an SMT? Questions, right? So that same low is here. Okay, we took out that low. Okay, so did ES take out any further lows? Looking at this low now, okay, this 8 a.m. low wasn't taken out on NQ. Was it taken out on ES? Yes, it was taken out on ES. Okay, cool. Now we have an SMT. Okay, So potentially we could now look for a buy setup back to the upside to just potentially this fair value gap, right? Because realistically, if price wants to continue down lower, we want to see it trade back to the 50%. Where's the 50% of this move? Where that 1 hour fair value gap is. They align perfectly. So if a price currently is showing us that it's losing momentum, it's losing steam from the S&T, right? It hasn't got enough power in it to push lower. So now what does it need to do? It needs to pull back, okay? Where's the logical place for it to pull back to? 50% of the range. That correlates with this fair value gap and then continue down, right? So we could look for a trade back up to that 50%. So let's drop onto our lower time frame. What do we have? Look at this. Beautiful. Straight away, right? We've got an inversion of 2 fair value gaps here. Right? It really doesn't have to be overcomplicated. Both fair value gaps in the leg have been closed through. So we can literally just enter along here. Right? Stop loss below the low. Target up here. Back at this 1 hour fair value gap. And we've also got these data highs left from the news, right? So this is a data high. A data high from news is a very strong draw on liquidity because that's when a lot of orders entered the market and a lot of volume stepped in. Okay, so here's our liquidity there. Let's go ahead and click buy. Advanced order, buy. Stop loss is set, TP set. Let's see if this works out. Pushes up. All right, now, obviously here, we've got these fair value gaps here. Big displacement happening here, right? Also got this order block here that we can reject off. So likely we're going to come back and bounce off either this order block or this fair value gap and continue up to the highs. We come back to the order block. All right, maybe you wanted to get a scale in here, okay? Came back to the order block, you've still got your draw on liquidity. If we invert this fair value gap, you could potentially get a scale in. Now I can trail my stop loss to this low. So that's where I'm trailing. Please don't take me out. Or you... Yeah, it took me out. I bet it goes without me here. Okay, we take a small profit there, and that's the importance of trailing. But you see the idea in how I built that concept. Have you tested this concept on stocks? Would there be any different considerations? I haven't personally tested it on stocks, so I don't want to say that there is or isn't because I haven't personally tested it on stocks, but I have heard that it works on stocks. So it doesn't matter which asset took out liquidity and which didn't, as long as they're in SMT accounts. When does SMT invalidate? When both lows are taken out. So let's say we were looking at this high. So if I were to go into the 1 hour, let's say we were trying to find an SMT between these lows. So this low here and this low here, right? And let's say there was, right? So ES didn't take this, but the second both of these assets now both take that low, the SMT is now invalidated because there's no difference. They're the same now because they both took out that low. So there's no SMT. Oh, that makes sense. Okay, cool. Let's continue trading, right? So here, right, here's what caused the sell-off. So I was too focused on the low time frame, so I missed this. But as you can see, this 1 hour fair value gap opened up here. We took out that high, so aka the liquidity. And then we continued to, so we just rejected off this order block here, right? And then we continued the downtrend to the downside. So we're looking for at least this low to get taken before we can look for anything. Okay, so we get a big on the open, potentially. Yeah, daylight saving. So this might have been the open. And now we have this 50-minute bullish fair value gap to look into. We just broke structure here. So this is like a market structure shift on the 15-minute or a breakage structure, whatever you want to call it. We have this 15-minute big bullish fair value gap here. So now we would look for an entry from here to then target this order block here, just because it's the closest thing to target. So looking at this now, okay, now I'm dropping onto the 1 minute. Where can I find my entries? Where are my entries? Where are my entries? Not really seeing too much here right now. So ideally a sweep of these lows, a fair value gap gets formed, and then we enter the other way. There it is. Right there. So here's our entry, inversion of this fair value gap, big displacement through it. And we would look to get long. TP1 or your break even is going to be here. And then TP2, you're looking at this high. TP3 all the way. Oh, I'm taking a losing streak here. I feel like this is me being silly though, to be honest. Let's take a look. What did we miss? Okay, so we forgot about the order block here. Right, no biggie though. Then we just look for our re-entry. Now, okay, so where's our re-entry here? So we need to close through this. All right, let's just double check this trade over because I have been rushing a little bit. Okay, 5 minute. We're in this 5 minute fair value gap. We've also got this kind of unicorn setup here. So here's our breaker block. Okay, rejecting nicely off that. Cool. 15 minute. Tapped into a 15 minute order block, rejecting nicely off that. Cool. On the 1 minute, we've inverted this fair value gap. We've got this sort of trend line liquidity built up here. So there's plenty of orders here to take out. So yeah, I think this is valid. We can get a long here. Does it have an SMT? An SMT is what would make this A+. Let's have a look. So we did tap into this fair value gap here. Not really an SMT though. So I would rather see this with an SMT, but we'll still take it. And let's just drag our take profit up to the highs. Okay. Okay, I would debate going risk-free about now. I don't like how it's stalling, so I would go risk-free. Okay, cool. Going to take a partial at this high. And again, I take another break even there. But this is the reality of what is going to happen potentially in your trading, right? You follow the model, you follow the checklist, you follow the playbook, and you have to be okay with taking these break evens, potentially taking losses. But after, as you can see here, we've taken how many trades? Closed positions, 10 trades, and we're up 10%. Not too bad going, right? We've had just one break even there, but these could have been break evens also. So yeah, it's just obviously, you know, being able to psychologically withhold that as well. But let's zoom back out here. It's kind of 4:52, so let's go to the next week and next day, sorry, and see what happens. So our whole idea there, now that we've skipped to the next day, okay, so now this is interesting. So this looks like some interesting price action. Let's jump out here, go back to the higher time frame, reset, new day, new stuff. What are we working with? Right, so we have SMT here on the 4 hour. Okay. So SMT, this low to this high, SMT, this low to this high. Be a lot clearer to see it on the 1 hour and 15 minute. All right, so you can see that there. See how they're opposites. This one goes up, this one goes down. All right. We've just taken out this high. Still looking pretty bullish though. So on the 1 hour, where could we look to target? Got this area up here, potentially for some liquidity. We've got this order block here. Okay. So I'm going to watch carefully and see what happens with this high. Is there an SMT on this high? This high here. So they both took it out. So there's no SMT. So I'm still looking for buys if I can get them. I want to enter off this 30 minute. Ah, missed the trade. Never get a pullback. Okay, no worries. Again, that's something that's bound to happen. God damn it, that's a good trade. Can you see how powerful this move with though? When you get a higher time frame SMT. So this was a 4 hour SMT. Look at the size of this move that you get after that. You guys ever spot like a 4 hour, 1 hour SMT and it kind of validates, right? So there was this SMT, you had the inversion, right? It's looking bullish. Like it's going to pop. It will pop 9 times out of 10. So that's how you kind of know when to take out these sort of like massive, massive moves. Carrying on with this. Obviously still bullish to take out that high, but near impossible to get an entry anywhere. You'd have to look really hard on like the lower time frame. potentially you could look for a long here, but you're so in premium that it would crush you. There is an SMT here though. So we could potentially look for a pullback. See the SMT there. Again, though, this wouldn't be the greatest trade of all time. That's for sure. See if you get the inversion. You don't get the inversion. It continues to push up. You could potentially take it long. Again, it's not the favorite though. The thing is, because it's so bullish, like trading in this area is just like, it's bad news. Like, look how bullish that is. So me trying to take a short here is just bad news. And it would be a scalp. Like, I'll take a short here, right? And I'll put my stop loss there. And I'll just put my TP there. But that's like as much as you can go for against the trend. See? And you end up getting stopped. So it's never worth trading against the trend. But the valid setup there would have been take out this low, invert that, retrace of the inversion, and then it should run up to the highs. Just misses the highs. And then this is now choppy price action. So when you see this, and it looks like a barcode, show you this. Right, that's a barcode. Obviously, I'm sure most of you know what a barcode is. When price starts looking like that, you know not to trade. Does it matter the direction of the SMT is pointing up or down or on NQ, or is it just that there is one? So if you're looking for sells, obviously you would get a bearish SMT. If you're looking for buys, you would like a bullish SMT. So you would like it to have taken out a high, or if you're looking for sells, or you would like it to have taken out a low if you're looking for buys. Do you have any tips for entering the trade once you missed your ideal entry? Yeah, so you can look for the same model over and over. So like, let's go back on this, right? Let's say we've missed our entry and we wanted this big move up and we were looking to take this inversion off this and get long, right? But we missed this, okay? So let's go back to here on this. Where is this price action? So it's about here, right? And we missed this, right? Then what I can do is I can go onto the lower time frame and look for setups that obviously do that, right? So I've got this big displacement here. What do I mean by displacement? This strong aggressive move here, right? So then I just look for the same thing on the lower time frame. Liquidity sweep, inversion, and then you could get long there on the lower time frame after you miss the move, right? And then it obviously runs up, right? But then, there's going to be loads more opportunities like that. What do I get here, right? We chop around for a little bit. We accumulate, right? Accumulation of orders here, power of 3, okay? We manipulate these lows. Then I look for the same thing back up. Where is my entry? So my entry would be here. We invert it. Then I can get long here. Put my stop loss below the manipulation and ride it up to my target again. Okay, but it's kind of about having patience and not chasing. The main thing that you always need to wait for is a liquidity sweep. Liquidity sweep is gold, okay? And as I said, right, this fair value gap is a high probability fair value gap. Why is it a high probability fair value gap? Remember what we just spoke about? Because we have this inducement before the fair value gap. Then we take out that inducement, tap into the fair value gap, and then continue up, right? There's also an order block here. You can't see it, but this little wick here is an order block. If you were to go onto the 1 second time frame, that would be an order block, or the 5 second time frame. I think we can actually. See? And bear in mind, guys, I did not even look at that, right? You're sat with me. I knew that was an order block on the seconds time frame without even looking. All right? That's how tuned you can get to price action eventually if you study this long enough. But yeah. Okay, what time is it? We're an hour and 1 minute in. We'll do one more day, and then we'll do Q&A, and we'll go over any questions, anything, and then we'll continue. Okay, so had this massive move up. We took out these highs, right? Liquidity sweep. Perfect. Amazing. SMT, question mark. No SMT. All right. Looking, did we tap this fair value gap? Okay, so we did take this fair value gap. So this kind of scares me a little bit. Going on to the 1 hour though, do see this order block that we seem to be respecting. So an inversion of this fair value gap will give me my bearish bias, or I can look for a buy out of this fair value gap. So let's go on to the lower time frame. What do we get? Okay, so we end up buying out of there. Again, we don't really get our entry. Here was the inversion that we wanted. This would be a great opportunity because we did kind of miss this trade. Could reject off this order block. So I just wait for a retrace because of that. Yeah, see, good thing that we didn't chase there. So we reject off that order block. Gives me a pretty concrete sort of decision that we're going lower. So we've inverted this 1 minute as well. Can we get a retap into it? Yeah, we can. So you could look to... but we're also a mixed bag, hard day to trade this because we've got so many sort of bullish and bearish PD arrays, right? We're rejecting these lower time frame bearish PD arrays, and then we're also respecting these lower time frame bullish PD arrays. So this is like kind of, I'd want to see price basic. I want to see this 1 hour fair value gap be my decider. I don't want to trade until this condition has been met. All right, see how we end up shopping around there for ages. Lower, obviously low probability conditions there. And then we end up breaking away. Was there an entry on our breakaway? That's the question. So yes, there was. So just bringing price back here, just to show you. We're in this 1 hour fair value gap on the 15-minute time frame. We make this break of structure. Why is this a valid break of structure, you might ask? Because we made this displacement. As we broke structure, we opened up multiple fair value gaps, right? So this is now creating bullish PD arrays for us to trade off. Okay, so simple little 2022 model here. Then you put your stop loss below here, and you could target up at these highs, right? Hit buy, of course. And then it taps back into the PD arrays, and then it moves away. All right. So what makes a valid breaker structure? Just to recap, okay? Valid breaker structure, it displaces aggressively above the high. Candle closes clearly above, it doesn't wick, and it opens up bullish PD arrays on the way. And a good SMT there as well, apparently. Yeah, and a good SMT there. All right, here's the SMT. SMT that low and that low. See how this same low here, this is the same low there as the same low there, right? But this low on ES gets taken out on NQ. It doesn't. There you go. What's the difference between 2022, 2023, 2024 ICT concepts? They're all the same. They're all built off the exact same stuff. It's all based around liquidity, fair value gaps, order blocks. The only difference is it's repackaged and kind of sold different ways. There's like market maker models, which is like getting really advanced into it. How do I learn ICT? A lot of studying at a chart. A lot of studying at a chart. I kind of had a bit of ICT concepts, like the whole liquidity sweep and that kind of supply demand that I used to trade before ICT was even a thing. And then kind of ICT came out and it became quite popular. And then it kind of confirmed all my theses that I really had. So then I just kind of watched a few of the videos and I just kind of went from there. But mainly screen time. Like I can't even imagine how much screen time I have on a chart. Like probably for the last 8 years, I've watched the chart price action every day. Obviously not weekends, but yeah, sometimes weekends. Any other questions, guys? What are PD arrays, order blocks, and fair value gaps? What's a good average RR for the IFVG model in your opinion? 1 to 2. 1 to 2 is good. Try leave runners if you can, but even 1 to 1 is still pretty good. But 1 to 2 is ideal. Sometimes you can even get like 1 to like 10s on stuff. It just depends on your daily bias. If you're extremely confident in your daily bias, then let runners run and take a partial. If you're not so confident in your daily bias and you're a little bit confused of where price is going to go for that day, then, you know, just take your 1 to 1, 1 to 2 and get out and get paid for the day. But if you're extremely confident in your daily bias, let them run to a 1 to 4, 1 to 5. Mine on average are between 1 to 2 and 1 to 5, I would say. But yeah. Did you guys enjoy today's session? I feel like it was a bit of a rushy one, and I was just kind of going through it. But yeah. As I said, I'm also ill, so I'm trying my hardest, but like, yeah. Cool. I'm glad you guys enjoyed. For July, I shall be doing more. Yeah, the recording I will post on YouTube, and I will link it you guys either today or tomorrow. I'm going to stop the recording now, actually.